so today we're going to finish up chapter 2. And I'm going to have to turn this on. So we're going to finish up chapter 2. We've got a few more PowerPoint slides that we want to go through. I've also got some group activities that you guys can work on, some problems, and then we'll go through them. But also I want to know if you have any questions about the chapter 2 homework. I suspect that maybe you do. Hopefully you've gotten started on it and have been able to generate some questions that we can take a look at. I do have a few here that I picked out that at least in my experience a lot of students have had questions on in the past, and so if you didn't come with any questions, I've got some that we can go over. Then if we have any time left, which I really don't think we are going to, we can get started on chapter 3. I don't think we're probably going to get that far, but just in case we zoom right through, I did put that up there. But today is mainly just to finish up those PowerPoint slides and to work on some problems associated with the calculation of wages, overtime, and all of those different types of scenarios. So any questions right now before we finish these slides up? All right, so let's go over here. So we had finished up talking about the fluctuating work weeks and those BELO plans, and I suspect that there are going to be some questions regarding the calculations of those. And I admit that those are difficult calculations to understand. I trip over them myself. So if that's one of your questions for your homework, I certainly understand that. But we'll go through a couple of other things that we need to know with regard to different methods of paying employees. So one of them is a piece rate system. This happens when employees are paid based upon production. So maybe the number of units that they inspect, maybe the number of units that they produce. It has to do with the units that they actually get through during their work time. Now, the complication comes in when because these employees are still entitled to a minimum wage that is based on the hour, not based on the unit necessarily, and they also are entitled to overtime pay based on how many hours that they work. So we have to do some conversions here. There are two ways that we can do this. The first one is taking the number of units produced times the rate per unit that is paid. So for example, if you're decorating cakes, I don't know that anybody actually pays for cake decorating in this manner, but if you're decorating cakes and you get paid $25 per cake that you decorate, well, and you decorate 10 cakes in the time period, well, units produced is 10 times the unit piece rate, which is the $25 per cake. So your total regular earnings would then be $250 for decorating those 10 cakes. To convert that then to an hourly rate, we would take those regular earnings, the $250, divided by the total number of hours that are worked. So we still need to know how many hours are worked in that period of time. So we say they worked 40 hours. Actually, yeah, I guess we can use 40. So 40 hours in our example. Let me put this right there. So $250 divided by 40 hours, they're making $6.25 an hour. Oops, right? That's not enough. That's they should be making at least $7.25 an hour. So in that case, they would need to be paid an additional amount. So let's just say they worked 20 hours. So $250, divided by 20 hours, so they're making $12.50 per hour. If they, well, in this case, they're working 20 hours, so they wouldn't be being paid overtime. Maybe I need to use some different numbers so that I can get that actually up to. So let's just say they're making, let's say they decorated 20 cakes. So 20 cakes times $25 per cake, they're making $500. That's their regular earnings. They did that in 40 hours, divided by 40, $12.50 per hour. There's our hourly rate. Now, if they worked overtime, though, we've got to pay them for that overtime premium. So regular hours are 500. I'm sorry, regular earnings are 500 divided by, let's say, 42 hours, 1190 times 0.5. Now they've got an overtime premium of $5.95 per hour. And we'll go through some other examples here. My example's probably not the best one. We've got a better one here that they put together. So then we're going to take our regular earnings plus our overtime earning premium times our overtime hours to get our gross pay. Now the second method that we can use, so that's based on the hours for the overtime, and again, we're trying to determine what that overtime rate is. The second method, method B, is based on, we have to keep track of the number of units that were actually produced in overtime, and then we multiply that by the overtime rate. So take our number of units produced in 40 hours times our piece rate, plus the number of units produced in overtime times 1.5 times our piece rate. So in our example of the cake, if we worked 40 hours and our piece rate was 25, our units produced in 40 hours was, what did I say, 20? 20 at $25. So there's our $500 here in the first part of this calculation. Then we would add the number of units produced in overtime. So let's say they decorated 2 cakes in overtime. Then we're going to multiply that piece rate, the $25, times 1.5, $37.50. So now they're going to get paid 1.5 times for every cake decorated in overtime. So 1.5 times that piece rate. So times 2 cakes is, what is that, 60, 70, what's that?
75.
Thank you. Put that in my head. So then we would have the 500 in regular. So total 575. So a little bit different when we're talking about piece rate. Let's see if we've got a better example here than what mine was. All right, but in this one, you've got to know how many units were produced in overtime. So you do have some more tracking that you've got to do. So we've got 4,812 units that were inspected in a 47.25 hour week. 600 of those units were produced during hours over 40, those 7.25 hours. Mustafa is paid 12 cents per unit. We're going to use both methods to calculate what his gross pay is. So in the first one, we're going to multiply the total number of units that were inspected times the rate per unit, 12 cents, to get his regular earnings. Then we take those regular earnings and divide it by the number of hours that he worked, the total number of hours that he worked. So his rate was $12.22 per hour. Multiply that by 0.5 for our overtime premium, and then we get a total of $6.11 per hour for the overtime premium. Then the last step, we're going to add those regular earnings plus the number of hours in overtime times that overtime premium and add those together. for 621.74. So the key here is you're dividing that by the number of hours worked, not by 40 hours, to get that rate. And you're using the overtime premium approach in this method A calculation. Method B, we've got to pull out the number of units that were produced in overtime. So 600 were produced in overtime. That means that 4,212 were produced during regular time, during the 40 hours that he worked. Multiply that by the 12 cents per unit. Second part of in the overtime calculation, we're going to multiply those 600 units that were produced during those 7.25 hours of overtime times 12 cents per unit times 1.5. So 18 cents per unit is what he's getting paid in overtime. So his gross pay then is $613.44. Now we still have to make sure that he's making at least $7.25 an hour, and that those overtime hours, that the 47.25 hours add up to meet the requirements for minimum wage and overtime pay for that piece rate. Now in his case, it more than does that. Okay, questions? No, there's another example
Do
here.
you have to use one over the other, or can
It
you?
just has to be an agreement with the employees. So it's just so that they have an understanding of how it's going to be calculated. Obviously, in this example, the first method is more advantageous to the employee by a few bucks. But yeah. So here's another example. Royson is paid to inspect shellfish, paid 8 cents per case, and inspected 6,897 cases during 43 and a half hours. 423 of those cases were inspected during those 3.5 hours of overtime. Using both methods, again, we'll take the 68.97 times 8 cents, regular earnings 551.76. Divide it by the total number of hours worked to get our hourly rate, and then we'll calculate the overtime premium. Multiply that by the number of hours worked in overtime, add those two together for gross pay of $573.95. Second method, we're going to have to pull out those 423 cases that were inspected during overtime from the total. What's remaining, 64.74, is going to be multiplied by the regular rate per case for inspection, 8 cents, and then add to that the overtime amount. So the 8 cents per case times 1.5, so 12 cents per case inspection times the number of cases inspected during overtime. Add those together to get 568.68 overtime. Questions about that? Does that make sense? So that's the crux of the piece rate. So oftentimes employers will provide some special incentives to employees to produce more or to sell more. You know, the more that the employee sells, the more the employer is going to make in profit and in gross revenue. So in order to encourage employees to do that, oftentimes employers will have incentive plans where it's tiered, meaning if you produce a certain amount, or if you, let's just say you sell a certain amount, over and above that amount you get additional pay, and then over and above that amount you get additional pay. So kind of a tiered system, and it can be for units produced, it could be for units inspected. It's oftentimes used for sales as well. So if you sell $2,000 during the week, then you'll get maybe a percentage of those sales, a commission, 2%. But then if you sell more than 2,000, maybe between 2,000 and 3,000, they up that percentage to 3% for those amounts that are over that 2,000, and then so on and so forth. So it kind of sharing that sharing that extra income with the employee. As I mentioned here, so it's more complex than time rate or piece rate systems. They can be super complex, these incentives plans. I mean, I think it's always best to keep it as simple as possible so that the employer and the employee understand the plan. Employees really need to understand what they need to do in order to receive those incentives. If they are confused about what they have to do in order to get that extra pay, then that's going to disincentivize them from doing the work. So here's an example of one. So in this case, it's for units inspected, 18 cents per unit inspected, up to 2,000 units per week. And then between 2,000 and 3,500, 24 cents per unit. Anything over 3,500 is paid at 36 cents per unit. Now, obviously, this can encourage the speedy inspection of units, but depending upon what it is, of course, the employer also wants to be careful that the work is actually being done thoroughly, because it could also incentivize employees to rush through their work and to not do a thorough job with that. But that's kind of an example there of a tiered incentive plan, which is sort of like commissions as well. Commissions are generally done with regard to sales. So if you think about salespeople, I don't know if you've ever been into a store. We were doing some school shopping. We went out to the outlets in Altoona with my son, and he saves up his money so that he can get a polo sweatshirt or sweatsuit. Saved up a lot of money. I was not going to pay for that. But I found it interesting when we went to the counter, they asked specifically, was there anybody that was helping you? So obviously there is an incentive plan there for individuals to receive some sort of sales commission. I hadn't seen that for a long time, but they must have some sort of commission plan. So in the case of commissions, of course, this is where the employee is going to get some portion, usually a percentage, of the sales that are completed during some set period of time. Maybe it's on a weekly basis, maybe it's per pay period, maybe it's on a monthly, annual, and it can be done in all different types of industries as well. So in our example here, we got Sam sold $40,000 of product. His quota is $31,500. That means that's the minimum he has to sell. He gets 2% in excess of his quota. His annual base salary is $30,000. So that's just what he gets, but for that $30,000, he's supposed to sell $31,500. If he gets paid bi-weekly, let's calculate out his gross pay. So first thing we need to do is determine what his base earnings are. We're going to take that annual salary and divide it by the number of the frequency of pay for the year. In this case, he's on a bi-weekly pay schedule, so he's getting paid 26 times a year. So his base earnings every 2 weeks is $1,153.85. On top of that, though, he sold 40,000. He sold more than his quota, so he's going to get 2% of the amount over and above that. So in this case, 40,000 minus his quota times the 2%, he gets $170 commission. Add those two together, and then that would be his gross pay for the pay period. Again, used to incentivize employees. Has anybody ever worked on commission? There are certain industries where, especially like financial advisors in particular, will work entirely on commission. Like, you've got to meet that quota in order to get your base salary, and if you don't, then that amount that you don't meet is going to come out of your next salary. So it comes out of your future bonuses. So if you were below the $31,500, you're still going to get paid your base earnings, but now you're in the hole with regard to any future commissions. You're going to have to make that up in the future with those. Non-discretionary bonuses, another method of incentivizing individuals. So these are part of the employee's wage rate. These are bonuses that the employee knows what they need to do in order to earn it. It's not just a surprise bonus, right? They are included as part of the employee's wage rate. So when they're in our calculation, we did some of this in our calculation of minimum wage and overtime. We included those in some of those examples. They have to be included for the period covered by the bonus. Let's see, what else do I want to say? So we divide the total hours worked to get our regular pay. Also, our overtime is going to be calculated based upon the rate that includes these non-discretionary bonuses. We've got an example here. Jamil, who earns $13.50 an hour, earned a safety performance bonus of $85. So that's the type of bonus where he knows what he needs to do. If he has no accidents during the week, you know, I always think of Homer Simpson in these examples, the safety inspector. No accidents during the week, he gets a bonus, that sort of thing. So he knows what he has to do. Don't have any accidents, or I guess at least cover them up if you have them. $85, worked 44 hours during the week. Pay would be calculated by taking the $13.50 times the 44 hours, plus, now we're gonna add the $85 bonus. So that kind of gets included then in his regular earnings for this week. Now, the next time, if he doesn't get that bonus, it's not going to be included. But, so $679 divided by total of 44 hours, so his regular rate of pay is $15.43. And again, the reason we need that is to determine how much he's going to get paid for those 4 hours of overtime. Multiply that by the overtime premium, and then multiply that by the 4 hours, so his overtime is $30.88. Add those two together, total gross pay is $709.88 for those overtime hours. Okay. Questions about non-discretionary bonuses? Okay. Okay, so profit sharing plans, just as an FYI. So this is where employees will share in the corporate profits. There are different ways that they can receive their share. Hy-Vee is well, they call it employee owned. So there's profit sharing within Hy-Vee. It can come in a cash payment. Oftentimes what employers will do is they'll distribute shares of stock of their own company to the employees. So that also incentivizes employees to work harder, because as the company grows and increases in value, the share value also increases, and so the value of their portfolio is going up. Could be paid into a retirement account, which would be a tax deferred type of account, so they're not having to pay tax on it immediately. Or like I said, they could be distributed as shares of stock. What else do I want to say here? Okay, so in summary, I think that's a summary. Here's our summary. So we talked a lot about the FLSA. We talked about the enterprise coverage versus individual coverage, and went into some more detail on that. We talked about how we define hours worked, whether or not certain hours are included when we're doing those calculations to determine how many hours were worked. We talked about the records that are used to collect payroll data, and we kind of glossed over that a bit, but timesheets, time cards, that sort of thing. Did a lot of work on calculating regular and overtime pay, especially that overtime pay. That's where it really gets a little bit messy. And then we finished up here talking about compensation plans. That was our chapter 2. So when we move on to chapter 3, so this is, chapter 2 is devoted to determining what our gross pay is before we have any taxes withheld or any deductions. Gross pay is going to differ substantially from net pay, what the employee actually receives. So our future chapters are devoted to calculating those amounts that are withheld from the paycheck to then arrive at what our net pay is. Chapter 3, we're going to start talking about Social Security and Medicare taxes, and how we do the calculations on the withholding for those amounts from the gross pay. But Chapter 2, we had to start out determining how we get that gross pay. So, that said, what I want to do now